Happy New Year and welcome to a special first podcast of the year edition of Stu's Days, and a very positive looking Stu Kedwell joining us. He is the global chief investment officer at RBC Global Asset Management. Stu, you had you had a little bit of time off, and the family's good coming into the new year.
Yeah, no, it was a great vacation. Great to be with the family. Of course, they went back to school today, so everyone's a bit sadder after a good time, but it's
Yeah,
all good.
all good. And you taking any fireworks on New Year's Eve or anything exciting? Did you have a big New Year's Eve bash at the Kedwell house, or was it quiet?
Well, we were fortunate. We were down south, and we sat on the beach, and there was a humongous fireworks display all across the beach, which was amazing. So very lucky on our part, and great to get some time to think about things and. You read some books, read fiction,
Yeah.
read a little nonfiction, and come back refreshed.
Anything interesting you're reading?
Well, I always read kind of like one trashy murder mystery, which was by Dan Brown, and it was pretty good. A friend gave that to me, and another friend gave me Dominion, which was all
Oh,
about the CP Rail and
yeah.
the kind of creation of Canada and the politics of nation state, nationhood, and getting that railway built. And it's kind of amazing that that was whatever 150 years ago, and the
Yeah.
more things change, the more things kind of stay the same. As geopolitics have kind of roared back to the center of many investors' attention. I'm not sure they were ever quite as dormant as some thought, but they're definitely a focus for investors now.
Yeah, and of course the railway across Canada is what I guess pulled the country together coast to coast and made Canada what it is today in many ways. And we had to stick together in 2025 against some threats, serious and at some point overstated, but nevertheless something we had to pay attention to. When you think about investing, those two, whether it's Canada or the rest of the world, when you think of 2025 as a year for investing, and of course managing a big group of investment managers all around the world, what do you think you're going to reflect back and think of for what last year was all about?
Um, well, I think in a big kind of bull market, themes really tend to play a major role. So the excitement over the future, particularly when it came to artificial intelligence, that was a big one. In the early phases of those types of moves, you're very focused on the kind of enormity of it all, rather
Yeah.
than the rubber hasn't quite hit the road on for some of the themes, and now we have robotics and automation, and obviously continued on with artificial intelligence, but there's a tremendous amount of focus on efficiency and productivity, and I think as we transition from 25 to 26, we're going to have to see returns on the investments. As I say, 25 was all about how great it's going to be. 26, I think, is going to be, is it as great as we thought it was?
Yeah, which is usually the harder piece. So as you start to think here in the early stages of just a few days into 2026, and hey, one of the things that one of the first boxes you tick is the market opens first couple of trading days, and you take a look at how those go, and that tends to give you a little bit of a feel for how the year's going to go and where people's sentiment is coming into the year. But what are your thoughts as you look forward? Is this a year that you're particularly positive about, or do you have some reservations about where we sit? And is that just a Canadian market thing, or is a U.S. market thing, or are there places that you're concerned about?
Well, yeah, as a I don't know how to explain my personality, although it's fairly balanced. So never on one side of the boat or the other. I think the year we'll see, like most years do. We'll see periods of significant optimism, and during those periods we'll have to have a bit of a reality check against, will the numbers live up to that optimism? And no doubt there'll be periods of frustration, and those might provide great opportunity. When we start every year, we always know in advance that there's likely to be some corrective activity. There's likely to be, some excitement. There's like to be, just like anything. There's going to be a range of emotions as we go forward. So, being pretty balanced and trying to think through those scenarios in advance. I think when we sit forward for this year, there's a couple of things that emerged last year. So the first was, the United States, while it was a strong performance, was not the top performing stock market. So we have to revisit, the ability for some non-American markets maybe to continue on with their relative performance. And it's early days, but emerging markets have had a stronger start again to the year, and as have a number of global markets. And it's an interesting time because if you went and you took a 10 or 15-year chart of these markets relative to the United States, these have been downtrends for long periods of time. And last year, as strong as they were, it really just took them back to the downtrends, or in some cases, small breaks of those downtrends. So, we can neither, discount that it'll be, one and done, but also, have to, I think this is going to be very important, telltale signs in the coming months on whether or not those trends are in fact, changing, or the winds changing on those trends. And as I say, early days, but quite often when you get just the first couple of days of trading, you like to see what's gone on, and some of those trends have persisted. So we have that as a big one. Then the second, of course, will be the enthusiasm for artificial intelligence and data centers. Will that live up to the billing that we've seen? And I think most importantly, at some point this year, we're going to need to see return on investment in those areas, and so that will come through more demand for data centers, because people are actually getting a benefit from using artificial intelligence, and then that'll have to roll back up into their businesses and see productivity. And we've seen it. I think last year, maybe one of the bigger examples was in the trucking sector. One company came out and showed how they were using artificial intelligence, which wasn't like generative AI. It was kind of more like machine learning, but to really optimize their trucking fleet, and their margins expanded, and the stock was well rewarded. So, you see, anytime business sees one playbook, everyone wants to hop on board, and they'll be very focused on efficiency and productivity, and can those benefits go through to the bottom line. And so I think those are some things that we're focused on. We've talked in the past about, will healthcare be a beneficiary of AI? All sorts of things. But I think it's going to be that transition to needing to see return on all this investment as the year progresses.
And that's where the focus is going to be, Stu. It's not going to be on the artificial intelligence, or the stocks that are specifically associated with AI, building out the plumbing, building the data centers, the chips that run everything. But you're going to want to start to see it as in your trucking company example, or a healthcare example. So a wide range of companies actually using the technology to make a difference for their bottom line.
Yeah, I think it's gonna be a combination of all of the above. But when you think about the billions of dollars being spent, the stock market's patience for what's to come is only so long. And we saw a few examples in the fourth quarter where companies that were doing the build out, and they were borrowing money to do it, and will they get their returns? Came to the fore. So I think it can't just be spend, spend, spend. At the end of the day, there's got to be a return on that spend. Otherwise, the stock market could lose some patience. The other thing too is there's going to be plenty of new innovation. I mentioned robotics, self-driving, you name it. I think the other thing too is that as we identify these future use cases, the competition might be a little bit hotter than we thought as well. And I think if I had to give, the last, or I mean not the last, but it's certainly another theme that we're very focused on this year is margins,
Yeah.
because there's a lot of companies with very high margins. The stock market has relatively high margins versus history, and when valuations are elevated, sustaining those margins becomes unbelievably important. So if you see, four or five big companies all getting involved in the same sandbox, you worry, will the margin profile be what everyone hopes for?
Yeah, and I guess so if you're looking at so that's that one theme in terms of the AI and the getting a return on all of the investment in AI is going to be one thing. And then you talk about margins more broadly and most significantly in, I guess, in areas of the market where you've got stretched valuations, and that would, we were talking to David Lambert just before doing this taping, and we were talking about European defense stocks as an area where the European market, good, nice valuation, but you've got these defense stocks which are stretched valuation. You look at the U.S. market, you've got the broader market, and then you've got the Magnificent Seven. You look at the Canadian market, you've got all the different stocks, and then you've got, I guess, gold and metals and some of those stocks which are flying high. Is that the one of the areas that you're most concerned about? In each market, you've got something going on that looks a little accelerated, so
Yeah, well,
for
no,
lack of a
no
better term.
question.
Yeah.
Like even in the last couple of days, we've seen, like, through Christmas there was a tremendous surge in the price of silver.
Yeah.
We've seen the price of copper rally quite significantly in the last couple of days. Nickel this morning, and the thing about, there's some commodities where, in the case of gold, if you're really worried about, some paper currencies, then you're going to keep, allocating to gold. But in the case of, something like copper, like there will be a price where it does impact demand.
Yeah.
I don't know exactly what that price is today, but as we're kind of in the $5.50 to $6 range, there's got to be some things that wonder, like, well, is there a replacement, or can we use scrap, or all sorts of things
Yeah.
happen in commodity prices. Like, the old saying, like, the solution to low prices is low prices, and the solution to high prices is high prices. So we have to always be on the lookout for that as people get very excited. In the financial sector, I think if you went through almost every sector, um, people are likely on the more bullish side of the hill. And that doesn't mean that, the party is about to cease or anything like that. But we also have to acknowledge that we're a long way from, putting capital to work when people were really worried about things. Now you kind of need a pretty placid environment to unfold and to be favorable for revenue and margins.
So if we another area, so we talk about the metals and the price of metals and copper in a way of uh, something that's used throughout the economy and touches a lot of different sectors and areas, including artificial intelligence and energy production. um, you think about how that price is stretched. Then we go to the other side with I guess a common view where people would be on one side of the hill would say you've got oil prices, which have a lot of things happening which could suppress those prices. Is that another area that is that an area, because particularly if we look at the Canadian economy,
Yep.
big impact on the Canadian economy. Is oil a sector you're concerned about, or again, do you think this is a case where that lower price is going to solve a lot of problems?
Well, yeah, I'm in the latter camp there. Like, you have kind of the marginal cost, which is the price that you need from crude to justify getting your capital back, and the cash cost that's going to be required in any given year. So, we're not far from that price today. So the level of investment that's going to go into, new crude oil production capacity, I think that's probably going to surprise people on the downside, which
Wow.
eventually is a good thing for pricing. There is a lot of oil currently in surplus right now, and the price has kind of been stuck in this, call it $55 to $65 range for some time as we, kind of work our way through that surplus. On the downside, things can go to what they call as cash cost, right? The capital's
Yeah,
already been
yeah,
sunk. So if you can get your cash costs back from operating it, then you might persist. But, again, like, normally when you're having these discussions, it's time to start thinking about, well, how would this come to an end, right?
yeah.
And even yesterday when we've seen the events in Venezuela, and the idea that this is going to get their industry back on its feet, and then you start looking at the billions of dollars required in infrastructure and the timing, and you still need a price of oil at these levels or higher
Yeah,
in order
yeah,
to make a return, like
yeah.
on putting that money to work. So um, so that's why, anytime you have a market that is facing a bit of a supply glut, that's the time where you want to go and kind of have a good look at that area, because if demand is constant to slightly growing, supply will often kind of take care of itself, and that can be more interesting over the intermediate term.
So if you're looking out at this year and you're just looking at kind of sectors around the world that are particularly interesting to you, is there anything that stands out? I know we talked a lot last year about banks and the steepening yield curve. We did talk about some of these metal stocks, and we certainly talked a lot about AI. But any themes you think this year in terms of sectors that look interesting to you?
Yeah, so anytime the the turning of the calendar is always a an interesting time to go look at this. Although that's not really the way an investor operates in real life. The areas that have been very strong have been industrials, financials, and technology stocks. And I would say to start the year that the financials and industrials kind of continued to carry on, and within the tech sector, you're starting to see a little bit of broadening where it's not just the AI stocks. It's unfortunately it's not yet software, but even some of like the analog semiconductor stocks, which are more
Okay.
kind of broad economy, semiconductor stocks have been doing a little bit better. Um, so you always want to be focused on what is working, and really kind of be at peace with yourself that the valuation hasn't pulled too much of that forward, right? So, the valuation in those sectors is more elevated, and as a result, you have pulled something forward, but it just doesn't appear to be altogether too much, in my mind at this juncture. And then you want to go and look at some of the beaten down sectors, which haven't been as strong of performers, because those are areas where the tide can turn. And starting last year, probably the first sector that the tide started to turn was a little bit in healthcare.
Yeah.
And we've talked about them as not bad valuations, a little bit more certainty on the regulatory front, maybe a beneficiary on AI from a development standpoint and some of their big cost structures. So there's been a bit of a turn on that front. Then the other areas that have not been as strong, consumer staples. Unfortunately, there's not immediate evidence that that those are about to turn. The valuations are improved, but you're trying to think, well, what is the trigger for demand, right? And there's pockets. Some of the retailers themselves have been stronger, but the actual providers of some of the kind of staple like not as strong. Like even in the Wall Street Journal last week, the trials and tribulations of Kraft Dinner's macaroni and cheese. Um, kind of being impacted on both sides by some store brands are cheaper and some of the newer fancier type brands that are adding in protein and all sorts of things. So they're kind of being affected on both sides. And that's not really a story in and of itself for mac and cheese, but I think it's consistent across a lot of those categories where margins have been fairly full, and they kind of get they run the risk of being attacked from both sides. So, in the areas that haven't really been leadership, you always want to go look and say like, well, what valuations are really attractive? How could this turn? How could it get better? And healthcare has turned a little bit. Energy has not turned yet, but has some ingredients. The consumer staple stocks have been, valuations are quite low relative to history, but again, kind of looking for the turn there. So it's, you're always looking across the whole market to see, um, I think what's really important for an investor is to sit there and for all the stocks that they own, say, well, what is required for this company to go up another, 10 or 15%? And if you can get, sometimes that 10 or 15% can come from earnings improvement and valuations going back to normal. There's kind of, two elements. Sometimes it has to be all earnings growth. Sometimes it has to be very dependent on revenues and margins expanding. So, whatever the element of the market is, you always want to say, well, what are the kind of, key tenants am I underwriting in terms of how I'm going to get my return?
Yeah, and Stu, I think we know from being in this business for a long time now, both of us, that traditionally it is in January and February, in the new year, where Canadians go to the gym for a couple of weeks, like everybody else in the world. But for Canadians in particular, it's a time where they look at their finances. It's the old RSP season, which sort of set that up in the mindset of Canadians and the whole structure of the financial year for Canadians. Of course, there's the critical tax season that comes in April. We don't want to dismiss that, but we've got this is the big investment season, and so we wanted to do this series of podcasts with you and lots of other investment managers from around the world to just take a look forward and think about what might be shifting for this year. And that's such a great point to look at those holdings and kind of, just say, I have this in my portfolio. Does it continue to make sense? And know that if you're relying on a professional investment manager like yourself, that these are the things that you're going through as well as you're looking at everything, and you're doing it. It's not to say, I guess this might even be the difference between a professional and sort of an average investor, like myself, who might just have that focus this time of year on finances and what my portfolio looks like, whereas you're doing it, and you and your colleagues are doing that every minute of every day all around the world, 365 days a year. But nevertheless, it's a new year. The new year starts, and you start to think about
Oh
what
yeah,
might shift as you come into the new year. It is a mark in the sand, right?
100%, 100%.
Now, so you've covered some of the areas that you think might be interesting this year, and some of the things to look out for. But some things never change. And I was out at a fireworks display as well, and I could have sworn I saw like it must have been like some kind of superhero shooting
Yes.
across the sky
Yeah.
amongst the fireworks. I mean, it was more spectacular than the fireworks. You have any idea? I couldn't figure out what superhero it was that was scooting like an incredible superhero. Seemed to take advantage of all of the ups and downs in the fireworks display and everything that was going on around the weather conditions. And any
Well,
thoughts? Because you always seem to be on top of this stuff.
that's right. Well, often confused with Mighty Mouse because I'm
Oh,
not the tallest individual, but dollar cost average boy was probably out there with his cape flying around with just the right tonic to deal with a volatile environment and keep you on your long-term financial plan. So
so you think 2026 could once again be a spectacular year for dollar cost average boy?
I think dollar cost average boy has the odds in his favor uh,
Ah,
repeatedly. So he kind of skirts in these winning conditions, which is a pretty good place to be.
so just chips in a little bit over time instead of putting all the chips into the middle of the table,
That's right. Yeah.
and then over time is a superhero for your portfolio.
That's right. Exactly.
Excellent. Well, Stu, great catching up to you to start the year.
Great.
We've got I'm going to say we must have done about Oh, I'm going to say we got to well over 40 Stu's days last year, and we hopefully can keep up that kind of consistency this year. I know you're a pretty big wheel now as the global chief investment officer. So I'm
Yeah.
a lot of people are
Elect,
surprised that you're
elect,
still.
elect, elect. I haven't. I still got 3 weeks before.
Oh, okay. All right. Well,
Yeah.
so maybe that's why you still are hanging out with me. A lot of people are surprised about that. They think you're going to ditch me, but hopefully we can continue this because it's always great. Your wisdom is I was reading a thing. I know you love Warren Buffett, and I reading one of his old quotes. Right. That's the be a good person and buy boring stocks. And I know you've done a lot of that, and you're obviously a great person. But words of wisdom you always have for us, and we appreciate it. So thank you, and all the best to you and your family for 2026.
Great. Same to you, Dave, and thanks very much.
This recording has been provided by RBC Global Asset Management, Inc. for informational purposes only and is not intended to be investment or financial advice. You should consult your own legal, accounting, tax, investment, or financial planning advisors before engaging in any transactions.